Hey, good morning, everybody. Welcome to Ankerstar Wealth Morning Show. 3 topics for you today, kind of quick topics for you. First of all, Mike's going to cover the CPI that came out this morning and what that means for the markets. And also, you may have heard, I don't know, what is it, 9 days ago now when we had the huge sell-off in the market on that little Manic Monday action we had on the concept of buying the dip. What does that mean? Mike's going to online of like the definition of that, but then he's going to talk about it and when you should implement a strategy like buying the dip or BTFD if you happen to see that. That's more of a social media thing. And then lastly, I will talk about the FAFSA, the much hated and about to be even more hated as they try to improve it, financial aid form. So if you have a kid in college, you've been through this pain, they were supposed to simplify it. Now it's delayed. You know that the magic date is October 1st every year. They said they guarantee it's going to be ready no later than December 1st. But one thing I know from 20 plus years of government service is that government guarantees are not something you want to bet on. This is a financial education presentation. You have to do your own due diligence for acting upon anything in this presentation. More disclaimer information is available at ankerstarwealth.com. The opinions expressed are Mike and mine alone. And let's go over to you, Mike, to get us started.
All right. And when you talk about government delays, I'll say this even in the corporate world, when they say a project is coming out on October 1st and it starts to push back and they're like, oh, it's going to be another month. Every time I've always been, it's like, this is going to be a lot longer than that. When it starts to slide, it keeps on sliding. So let's hope it's December 1st, but who really knows? That's just corporate experience, and I'm sure some people can relate to that. But today, the number as far as CPI, and this is one of the key things the government looks for, or the Fed looks for deciding when to make these rate cuts. It came in line with the expectations. So 0.2% increase, 2.9 year over year. That was what they were expecting. Correspondingly, the markets haven't done much. If that thing had come in at 0.3, the market would be selling off, saying, oh my gosh, inflation's still here. If it had come in at 0.1, the market might have taken off thinking, oh, they're definitely going to cut rates, but it was in line. So therefore, we're not going to focus, on just day-to-day noise within the market. What does this mean? 2.9 says the first drop that's firmly below 3%. Yay, since 2021. Wow, so inflation has been 3% and up, as high as I think 9.1% year over year. But this is the first time since 2021. And if you look at the graph I'm showing on my screen, look what it was before 2021. It was always right around 2. So still trending down. Still not where it used to be, and that is the actual increase. Are the prices ever going to go back to what they were in 2020? Absolutely not. There's no way. This is the inflation. The increase is slowing down, but it's not like the prices are going to revert down 30-40% to what it used to be. I mean, I wish that's what it was, but that is not. So show you another graph. This shows the month over month. This is where that 0.2% came in. Last month it was actually down 0.1%, but you can see that it's definitely trending down. So that's a good sign. So Steve mentioned the big sell-off last Monday, and in the moment, sell-offs seem bigger than they probably are. I mean, already many of you, I've met with some clients, are like, yeah, I didn't even realize there was a sell-off. Good. That means that you're trusting and you're not looking at that. Was it a big sell-off? Well, it was down at one point. It was down 5% and it ended up down 3%. I don't know that that's a major sell-off. And certainly with the recovery over the past week and a half, it's kind of gone. So let's talk about the concept of buying the dip or buy the dips. When an investor buys an asset after its price drops in the belief they are getting a deal on a good investment. So if you could reel back time, put yourself on last Monday, and at the end of the day, when things were like panicking, like, oh my gosh, this is down so much, if you have the courage to buy the dip. Now, most calls that I received are more like, I just want to understand what's going on. They're not looking to sell everything, but rarely do I get a call where someone's like, yes, I'm all in now. It's on sale. that's kind of the way we should think sometimes, especially if we're confident in this economy and where this stock market is going, which over the long term, it always goes up. Now, you might not do this with an individual stock because there are companies that go bankrupt. So don't go out there and buy a bad company that's about to go bankrupt and say, I'm going to buy it on the dip. It may just die. But overall, the market, you can buy the dip. The stock market is always counterintuitive. It's kind of like when things go on sale and it goes down, people are like, that stock doesn't look as good anymore. NVIDIA is a good example. The stock went down to $100 a share. Well, when it was at 140, people were like, yeah, I want it. It's doing great. I want to buy it. It's kind of like counterintuitive. So here, I want to bring this last article up. Dip buyers vindicated. So if you bought on the dip last Monday, and just so you know, we're always rebalancing our books. I know for my clients, I do look like, hey, if we want to get into, Google, Amazon, NVIDIA, when it's on sale, let's buy it when it's on sale. I'd rather do that. I know those are great companies. So, this says basically people were vindicated. It came back. I mean, the concern is always I bought it on a dip and then it dipped further and I wasn't really ready for that kind of volatility. That's always a concern. So, and that's part of the reason why we want to make sure we know your risk assessments, risk tolerance levels, and put you in the right models. So with that, I'll turn it back over to you, Steve.
Yeah, you bet. Everybody likes a good sale unless it's, assets that are capable of building life-changing wealth. And then people don't like sales for some reason on that stuff. But, and yeah, you never know if you're getting the best sale, but, same thing when you're buying your TV from Walmart or Costco or whatever, somebody could list it cheaper tomorrow. Get over it, move on, do what you have to do. Speaking of getting over it, there's one thing you just have to embrace head on and sit down and do, and that's the FAFSA. I've had some screen sharing issues, so hopefully I am back right now with the capability to show my screen here. So yes. FAFSA rollout was a stunning failure. Okay. Yeah, it already was a failure. Now it's stunning. So yeah, if you've done this thing, it takes, every time the government releases software, they estimate how long it'll take. Your taxes are supposed to take like an hour and 40 minutes. I don't really have much stuff that's interesting. It still takes me like 12 total hours to get through my taxes. And yeah, the FAFSA is supposed to be like a 40-minute deal. It takes a while, right? Hours. Maybe y'all are smarter than me. But they tried to improve it this year and roll out a new one, and that's not going so hot. So it might not be ready by October 1st. That's what this article on CNBC is saying, but they guarantee they don't guarantee. They project it'll be ready by December 1st. Who knows? But regardless, if you're looking for financial aid, this is your first stop, right? So it's the free application for financial student aid. They have changed some of the rules. So you have to get into the finer points of that. But what I'll leave you with is the cost of college is actually coming down. Now, if you've followed me for a long time, you know my opinion on this, but I will reiterate it today and saying that college, in my experience, is grossly too expensive for what you're actually getting. So what does that mean? Back when college was, 50, so back on this chart in 72 or 71 when it came out for the 71-72 school year, sure, you go out of state, you're paying $14,000 a year, and you go, okay, times 4, most programs, right? So it's at $56,000. That's kind of about right. It's like, that's a number that it hurts, but everybody can, not everybody, but a large portion of the population can come up with to be able to send a child off to college, or the child works. That's enough money where you can work and pay tuition. Okay. $40,000. You're not working at Sonic making $40,000 a year while you're in college, right? So come on. So why did this happen? Well, it's called student loans. The universities cannot raise prices if nobody pays. But if you make money free to college students, then everybody can pay. So the universities are left unchecked for like 4 decades. Well, they've been checked, all right? And people are starting to pass. And that's what you can see from 2020, especially the private 4-year colleges, the tuition has come down. Not a lot, But remember, everything else in the world is inflating. For the past 5 years, you actually have seen a decrease in tuition. Why? Because it ran out of control. I respect college professors. There's obviously an important role for academics and furthering the studies, bodies of thought, off towards PhDs and things. That's great. But I don't think that, my opinion is that university professors don't need to necessarily be making the same money as like titans of industry sort of thing. So this whole thing kind of got out of control. It's being checked. It's coming back down. People are starting to cry BS on this across the board. So that's my opinion. But anyhow, it is coming down. That's a little bit of a good news. But when you do talk to your children about math, if you want to show them this chart of, how much more it hurts if you're going out of state, it's something that helps for them to be aware of, especially if they're going to take some loans to cover it. If you're footing it out of pocket, that's your choice. But if you're putting loans on, you might want to think of how much that degree is actually worth, and if they're going to have student loans into their 30s, that sort of thing. So you could kind of financially be putting your child behind by trying to get them ahead. So just think through this stuff as you go through it. So, all right, that's all we've got for today. Super good topics. Thanks for listening in, and we will be back with you guys tomorrow. You have a good one. Bye.